I was a solopreneur prior to getting involved with QCA. And, like any entrepreneur, the first question you have to ask is, how am I going to make money and who am I going to call on? And who am I going to network with? So I figured that networking with angel investors was a smart thing to do because they tend to be well-connected people and they're embedded in the community. And so that's what I did. I started networking with my predecessor, and we've probably have had probably 400 or 500 mentors that have participated in morning mentoring. I was one of the first 30. So I volunteered to be a mentor for the morning mentoring program back in around 2007. And so I got my first taste of morning mentoring. I thought it was a really cool program. I was really nervous because I was around angel investors and they're all really smart. And I didn't want to say anything stupid. And I wanted to make sure that I was adding value with the founders that we were meeting with. But that's how I first got involved. And so I kind of hung out with QCA over the years, threw in a little bit, sat in on some meetings with them. And then when my predecessor decided to retire, he asked if I would like to step in. He said, I thought you'd be a perfect replacement for me. So that's how I ended up getting the job as an executive director.
Great. Scott, earlier on, you were telling me that, you have one staff. With that, managing such a big angel group, how is it possible?
Well, and we may talk about this some more during the course of the discussion here today, but we've become pretty well known for our member engagement, and it's really part of our model is to get our members involved as early as we can. And as well as I do, the primary motivation that people have to become members, become angel investors, isn't actually the money. It's really about giving back to founders. And
Yeah.
so my job is really the good to great model. How do I find the right people on the right seats on the bus? How do I match them up with and get them involved with things that they are comfortable with and they can add value to? And so our members do most of the work. And we were talking a little bit about the deal workflow platform that QCA has created through open source Microsoft tools, but we are able to use SharePoint in a way such that we can just automatically, we do all our work on Microsoft Teams, but we have found ways where we can just press a button and the Teams channels will automatically be generated. And all the folder structure is put in place there. We have a due diligence welcome package that we provide founders when we first start off the due diligence. We have a means by which we can tap into a member database and populate those bios into the document that we provide to the founder. So these little efficiency tools that we've been able to build into our platform has really helped drive the efficiency and allow us to do a lot more with fewer people. Yeah, as you know, you've run some angel groups. Being an executive director and running an angel group, a lot of times is death by ant bites. You got so many small little things that you got to do, and each one of those little things add up. So everything that you can do to build efficiency really helps to save time. So that's primarily how we've been able to accomplish some efficiencies and be able to manage with a lot of people with few numbers of staff members.
Right, absolutely. So I will first talk about the Queen City Angels. How has QCA evolved since its inception, which was 25 years ago? And what is your personal role in in driving that evolution today? How it has picked up the momentum and everything that it is doing today?
Yeah. Well, Tony Shipley, our chairman and one of the founders, we both we're guest speakers in the entrepreneurship class at the University of Cincinnati. And I tell people, and it's the truth, we've all experienced this, but we are the network effect of a startup here in Cincinnati. Um, Back in 1967, there was a company that spun out of the University of Cincinnati called Structural Dynamics Research Corporation. And it was really very similar to Park that Xerox created. And
Right.
it was everything engineering oriented. They were on the leading edge of CAD CAM design, the use of design drawings, engineering, and digitizing those things. And they ended up exiting to EDS in around 2000 for right around $1 billion. And we had four executives that had retired. Tony Shipley had worked there, and that's how we got started. We had five people that started, um, five white guys. You know, a lot of that's changed over the years, and they just wanted to give back to the community. And they decided they wanted to start a venture capital fund, but then they just did a study. You know, Tony is these were our five engineers, so we're a very process oriented group. And Tony said, well, let's go out and, study the smart practices out there. So he met with angel groups on the East and West Coast and in the Carolinas and decided that, we would start an angel group rather than a venture capital fund. And
Right.
then we had growth to 19 members in the second year. And then there was slow growth over the number of years. We have very little attrition rate in our group. It's under 10%. It's 5 or 8% in a typical year. So that's been able to sustain the group in the growth. And I came in 2014, and I felt like I had an opportunity to set it to join what I thought was a very good group. And I thought there were things that I could bring to the table to make it even better and make it great. And so one of the things that we did shortly after I started is we did a strategic planning process with an outside strategic planner, and we did a whole 360 in the community. We interviewed founders that we had funded, founders that we didn't fund. We interviewed QCA members. We interviewed ecosystem partners, colleges, universities, really everybody, sponsors. What's the
Right.
good, the bad, and the ugly of Queen City Angels? And from that, we have three standing committees that we continue to run today, and one of them is around marketing and awareness. And QCA over the years, and I think this all angel groups are challenged with this, is people may have heard your name, but they really don't know what your mission is. They don't know what you are, who you are, what you stand for, and what you do. So we have embarked over the last 8 to 10 years to change that. And so I think we hit a tipping point probably about 6 or 7 years ago, where
Mhm.
people can actually tell me what it is that we do, rather than just saying, "Oh yeah, I think I've heard of you. I know I've heard your name," but we really have been able to kind of move the needle that way. And because the awareness of our organization has grown, it's made it more accessible. We created a new membership group that's a very low barrier to entry, where members can buy a $25,000 unit, and that's aggregated into an SPV, and the SPV is an investor in our fund. And one of our core values is education. So we do 6 to 8 training sessions with those new Ascent members to get them level set on everything related to angel investing.
Yeah, great, great. Let's talk about mentorship boot camps and the education that QCA is doing. The Entrepreneurs Boot Camp has been running since 2001. What makes it so sustainable? Starting in 2001, coming till today, how is it possible? What you are doing, which is so sticky.
Well, I'd like to think that that we get so much momentum year in and year out, but it's so exponential. You know, um, People come to the boot camp and they get a chance to founders get a chance to network with fellow founders. What we've set up has been really special in terms of the curriculum. We do 13 sessions over 2 days. We do in the afternoon of the second day, we do mentoring sessions, which will lead us to morning mentoring. That was the precursor to having that freestanding program. but we cover everything from, what's the early discovery work that you should do? How do you leverage intellectual property? We do a session called View from the Heavens, what angel investors are looking for. We talk about how to develop your financial statements. We cover really everything that a founder needs to be thinking about. And anybody that starts up a new business, they should be thinking about. And so in some cases, I call it a scared straight program because people want to be a founder. They don't realize what they're getting themselves into, but we want to help them get the angel investor perspective on everything. So it's become a very popular program. We work with the ecosystem partners to be sponsors, and the universities are a big part of it. And the curriculum and the content is just fantastic.
Great, great. And is there a fee that the startup founders have to pay, or the
Well,
entrepreneurs have to pay to join?
yeah, they do. And this is where I feel like I've left a lot of money on the table over the years, but it's really our give back to the community. We charge $325 for 2 days. And
Wow, that is
so
nothing.
it really is nothing. I mean, I don't know where you can go to an educational seminar for 2 days and only pay $325. So,
Yeah,
um,
just amazing. Thanks for doing this. Uh, let's talk about the QCA morning mentoring session. What makes it special for founders? Because that is the stepping stone, right? From there, they go to the.
yeah,
Uh,
we did these mentoring sessions at the boot camp every year where the participants can sit down with 3 or 4 or 5 mentors that are there to be active listeners and ask questions. The founder leads the discussion. I'm working on this. I'm having problems with that. What do you think about it? And they just seek feedback. And morning mentoring, I call it. It's more like um, Dolphin Tank than Shark Tank. It's a place that's very safe for founders to come in and just talk about what it is they're working on. We have evolved, after COVID came on board in our society, we evolved the program to an online program. And now we have 10, 12, 15, sometimes as many as 20 mentors that sit in on that session. And the founder gets 7 to 10 minutes to do a presentation. It's not a pitch for money, but the mentors are active listeners. They ask questions. They fill out a scorecard. That scorecard is aggregated to feedback that goes back to the founder, and it's a free program. And so
hmm,
I can't imagine a better place for founders to go to get that kind of feedback where you have 12 to 15 to 20 people that are all, you know, volunteering their time to listen in and provide feedback. And so we've had probably 1,500 to 1,800 founders that have gone through that program over the last 19 years. And then
wow.
it's great for us because some of those companies will break through, and when they do, we have memorialized what we learned about the company in the morning mentoring session, and
Right.
we can go back to that founder and say, well, now that you're applying for funding, what did you do about X, Y, and Z feedback that we gave you from the morning mentoring session? So we can memorialize that information when we go back to meet with a company when they're ready for funding.
Right. And Scott, what is the frequency of this program? The morning mentoring session? How frequent in a
Well,
month or
it
year?
used to be 4 companies every month, and it was a half a day. Now it's an hour session once a week, and we may evolve it into once every 2 weeks. And what's really cool about what we're doing, and it kind of fits with the mantra of QCA. Our partner with that is the local incubator, and they had an aerospace engineer that came in as a new business coach that is looking to own the morning mentoring program from their side. We've just
Mhm.
done a whole strategic planning about morning mentoring. What can the mentors do differently? What value are the mentees getting from it? Um, do we need to change the funding the application for the program? What kind of follow-on things can we do after we've met with that founder? So we're continuously trying to improve what we do with that program and with the boot camp. Back to the boot camp, we used to tell show people how to build, how to write their business plan. Well, we don't do that now, but we still espouse that, but we've evolved it to where we've got a global expert in systematic inventive thinking, which is an innovation process. So we've evolved over the years. We've changed with the times.
Right. Great. And you were talking about that, the mentors who are there listening to the founder, not the pitch, but, talking about their business. They give them the written feedback. And also, are you using some kind of online form, or it is still handwritten?
Yeah, we
How do
use
you?
the online form for them to fill out the feedback scorecard,
Okay.
and then what I'd like to evolve to, and I think this will feed into some of your other questions, but it's really important that you find the right expertise to look at the right deal. You know
Yes.
that, um, and the more that we can use tools to be able to say these are the right people. It's not about quantity, it's about quality. If you can get the right mentors that have specific domain expertise with that particular founder's idea, the better feedback they're going to get. So we're
Absolutely.
constantly looking at how we can make that better. I mean, most angel investors have enough broad experience that they can ask questions about, like, how are you going to make money, and what's your go to market strategy, and what, tell us about your management team. But when you get into the actual technical aspects about things, it's nice to have subject matter experts involved.
Let's talk about the startup community and the synergies in there. What trends are you seeing in Cincinnati startup ecosystem right now?
Um, I think Cincinnati, I think you probably see this in many ecosystems. You go through ebbs and flows. And if you looked at our ecosystems maybe 7 years ago, 5 to 7 years ago, I'm going to go back before COVID, we had probably 6 to 8 accelerators in Cincinnati. And, when you have, and back then, if you recall, most accelerators would have 10 companies in their cohort. And so when you think about it, each year, if you have 6 accelerators, you've got 60 companies that are in the ecosystem working on some sort of a problem. Now we all know as angel investors, you're not likely to invest in the company at demo day. I mean, there's still many of them are still quite early, right? And but so many of those companies are going to break through a year or 2 years down the road. Well, if you've got 60 companies coming through your ecosystem every year, you've got a large number that you can look at a year or 2 years down the road. Well, that's kind of gone away. We One of the local accelerators got purchased by Generator out of Madison, Wisconsin. They went to a venture studio model, an industry vertical sort of venture studio model, and they have 4 or 5 companies. Some of the other accelerators have gone national, and they've gone online, and they've got founders that are from all over the country and all over the world. They're not necessarily located in this community, and so that's kind of changed the nature. And so we're looking at ways that we can regenerate activity. There's always things going on everywhere. This is a very entrepreneurial community. There was a Procter, there was a Gamble, Barney Kroger, on and on. This place has generated many, many startups that have become, major corporations. And so we still need to engage the large corporations, and we need to continue to work on narrowing the gap between big co and a startup.
Right. On the startup and the community synergy, my next question is that, how do you keep both investor and entrepreneurs engaged for a longer period of time beyond just funding round? What else type of support do you give? What type of connections do you bring to the table? How do you keep yourself engaged with the startups that you have funded?
Well, I'll give you a great example. Just this week, we met with a large insurance company based here. They're a $13.8 billion insurance company. They've invested in this space. They are all consistently looking at startup ideas to help their business. And they said to me, "Hey, if you get anything that's related in the insurance business, with the entrepreneur's permission, send it over to us, and we'll give you a little bit of an idea of what we think about it." So that's the kind of connectivity that you need in your community to build great startups. So, and that's our job as angel investors. How do we match up the founder with subject matter experts, not only as angel investors, but if a corporation is willing to give feedback as to whether or not they would use that technology or what they think about it, that builds a great community. And this is a very philanthropic community, and we've got a long running relationship with P&G, and we have P&G people that are mentors in the morning mentoring program. I've done discussions on how we do due diligence with some of the P&G finance managers, and those people know their business, but they need to know more about the startup world if they want to engage with startups. And so I think that's how we all can work together. And founders need to help founders, angels investors need to help angel investors and founders, and we all need to work together as a community.
Right. Absolutely right. Absolutely. Let's talk about the national perspective and ACA and your involvement with Angel Capital Association. You are involved with the ACA's education and certification committees. What insights are you bringing from QCA experience to the national stage with ACA?
I mean, you and I, before we started the call, talked about John Houston. God,
Yes.
God rest his soul. We One of the things that I did when I first started in this job is I went out and I interviewed not only our members, but I interviewed some of our sponsors. And one of our sponsors was an organization that works with economic development agencies and chambers of commerce to add economic vibrancy in their community. It's a law firm, but they help with tax credits, and they work with communities all over the country. And the gentleman that ran that organization, maybe not coincidentally, has now become a QCA member. But the first thing he said to me was, Queen City Angels could go out to communities around the country and teach them how to start an angel group.
Yes.
And I kind of kept that in my vault for years. And then at one point, I met with Peter Adams and John Houston. We were on the education committee together. And I said, we should think about this thing that would be sort of an angel in a box sort of concept, where you
Right.
have a whole package that you could provide a community on everything that you need to do to start an angel group. What does a membership agreement look like? How do you recruit members? And so that is one of the things that I threw out to the group. And, that was the precursor to Angel Box, which is something that the Angel Capital Association now provides. And I continue to work with the committee to come up with new ideas on curriculum. I think transition planning is a new course that I'm going to suggest to the group. As
Right.
angel investors age out, how do they keep track of all their investments so that they can pass it along to their heirs and be able to understand how things are going? And
Yeah.
I think there's probably going to be more that's going to be done in AI. We have a QCA member that's a certified facilitator that goes out and does some of this kind of work. And so I think there's still a lot more to be done. But we as an angel group, you may already know this, but we were the largest single donor into the Angel Investor Foundation, which is
Correct.
the organization that helped put together ACA University and is supporting the efforts of the education that we're doing. So it's a core value in our group. The better that people can get at becoming angel investors, the better they can help founders, and the better the founders can understand what angel investors are doing, the better they can be as founders.
So well said, Scott. I completely agree with you. Now let's talk about some of the misconceptions. What are some of the biggest misconceptions you see around angel investing, particularly for first-time founders? And I would like to break this into two questions from the founder side of the angle of view, and also from somebody who is becoming a first-time angel investor.
Yeah. Um, uh, I would say misperception number one is um, angel investors and the groups are a bunch of white guys that don't understand technology. Bunch of old white guys that don't understand technology. I mean, I heard that when I came in, and that is simply just not true. I mean, if you take a look at our group, Tony Shipley in particular, he was doing Internet of Things before that term ever came about. He was doing remote monitoring of machines in industrial environments all over the world. And then, you know, P&G claims that in the 1990s they were they created this term Internet of Things. Well, you know, our members were on the forefront of all of many of the technologies that are in place today. And we're not going to invest in something unless we understand it. So we've got, you know, across 213 members, we've got expertise in just about every area that you can imagine. So um, it and there are many more female members, um, ethnicities. So we're far more diverse in our membership today than we were at, you know, completely different look of our group now than when I started in 2014. So we have new perspectives on the world that we can bring to bear for founders, and um, we're going to do everything we can to help founders be successful and leverage this expertise. So we are not venture capitalists. I think that's one thing that founders may have a perception of. I don't know what your perspective is. I'd love to hear it, but people get venture capital confused with angel investing.
Yes,
They, they
always.
are they are different asset classes. They're both alternative asset classes, but angel investors tend to be more roll up the sleeves and get involved with the founder and the founder's team to help them solve those problems. And they're I think angel investors are less likely to want to change the management team out. Um, but it is different. And
Yeah. Yeah, I think angel investors are someone who is willing to take bigger risk because the companies are really early stage, idea stage companies, MVP stage companies, where we know that they may pivot a couple of times during their course before they reach to any VC.
yeah, well, and you know, we're going to talk. You know, we may talk about advice that I have for founders, and we'll get into this a little bit more. But this is why QCA is so conservative about valuation, because we know that a founder, even once they get into market, you know, we want them to do their homework. We want them to talk to prospective customers. We want to make sure that they're solving a big enough problem. But you know as well as I do, once they get into market, they're going to learn things that they didn't know, and that's going to increase the risk. It's going to mean that they may have to raise more money. They're going to run out of cash sooner than they expected to. And so don't go in with a valuation that's so high that you're not going to meet meaningful milestones such that you warrant the valuation that you already have, and you can look for it to be an up round when you go back to raise more capital. We all know it's very rarely, almost never, that it's a one and done sort of scenario. You're going to have to go out and raise money again. So
Yeah.
make sure that you don't put so much pressure on yourself that you have to like conquer the world before you run out of money.
If you could give one piece of advice to a startup founder pitching to angels for the first time, what would it be?
um, I would say transparency is very important. Authenticity is important. Um, Vulnerability is important. Um, Understand that angel investors are primarily, remember the number one motivation. They want to give back and they want to help you be successful. So specificity is another thing. Be very specific about what you want help with. Be willing to be open minded. You know, one of the primary things that we're looking at when we're looking at investing in a company, and I'm sure you've experienced this, is the coachability of the founder.
Yes.
Um, and you know, if a founder has all the answers, then they don't really need us. Okay, so and we want to be needed. So we want to leverage the skills, expertise, and experience in our group of 213 members. So there are people out there that may be able to help, and you have to be willing to be vulnerable and say, I need this help and I want this help from you. And that's and the primary motivation of being an angel investor is to give back to that founder. So don't be afraid to you know be vulnerable. Um, and it's not as if we don't expect founders to have a point of view, but be open minded and be willing to take a look at whether or not a different perspective might be additive to what you're trying to do.
Yeah, yeah. Scott, in the last question, take 2, 3 minutes, and you have been with QCA for the last 11 years now. Started there at 2014. What one legacy or lasting impact you hope to leave through your work with QCA and the entrepreneurial community at large?
When I first started this job, about 4 months into it, CB Insights ranked QCA number two out of 370 angel groups. And I joke about it. I say, well, you know, that just can't be coincidence. I come in, we're ranked number two, complete coincidence, right? But you know, and of course, our angel groups are saying, well, that's great, we're number two. Well, how come we're not number one? So we want to be number one. We want to be recognized by our peers as being a leading angel group, that we're doing all that we can to apply smart practices, learn from one another. You know, I can learn from you. I can learn from angel group leaders everywhere across the country. And so, and we want to be the number one choice for founders. We want them to feel like we have an open door and they can feel comfortable coming to us at a very early stage. I tell founders, when is the best time to get involved with angel investors? It's yesterday. The sooner you get involved with angel investors, the better you're going to understand what they're looking for. And we want to have that sort of open door policy, and we want founders to feel always comfortable to be able to come to us.